You've been scrolling YouTube. Your question is, how can I become a successful day trader making $200, $300 a day with, a $500 account? Now I'm going to give you the brutal, honest truth, exactly how I would go about doing this, and ultimately everything you're going to need to get started. Let's get into it. So I figured we start with the most boring of the subjects. Let's get into the trading broker, and this is who I would recommend. Now you can start with something like Webull. You can start with something like, Robinhood, if that's what you want to do. But the best bang for your buck is going to be TD Ameritrade, Think, or Swim. Now, this is going to be like for the intermediate trader that's looking to get serious about this. It'll have your charting software, it'll have everything you need all included. Now, again, this will save you money when it comes to using something like TradingView, TrendSpider, or any of those other platforms. You won't even have to use those. And I'm sponsored by those platforms, but I'm still telling you, for a beginner, this is the way to go. And if you're looking at something a little bit more, advanced, what I personally use, it would be Interactive Brokers. Now, I am sponsored by them, but I will still say it's the best feels when it comes to options trading, and their fees are still really, really low. I like both of these platforms. Thinkorswim for the beginner, IBKR for the more serious type of trader. Both of those links should be somewhere down below. But I know that's not why you came. You didn't come to hear about the brokers. You came to hear about the strategy. You came about how to execute X, Y, and Z. Now, the first thing that I'm going to tell you before we jump into those areas is you need to understand, what are you entering the game with? And this is where things like start to hit the fan, right? You need to understand, what are you actually looking at? It's a small cap 500, 1,000, 2,000, 3,000. Now, I would recommend anyone that's very serious about getting into trading around 3,000 to 5,000. That's like minimum, okay? If you start below that, you will have a lot more risk, which is what we need to explain number 2. Okay, so listen very closely, because honestly, this is the most important part of the video. And this is the part where no one really tells you. So if we're looking to jump into a trade, and let's say our goal is to make $100 a day, that's gonna be probably somewhere in the title of this video either way. So our goal is to make $100 a day. And if we're looking at SPY, whatever it may be, let's say hypothetically, we have a target of, maybe hitting 13.3, 413.3, 413.4. Okay. And we're looking to go long on this trade, right? So what people don't talk about is, yes, you can make your way up here. This is where you make your money, but they don't talk about the contrary. What are you risking in order to make that money? See, the basis of trading comes back down to risk and reward. What are you risking in order to make that? Simply put, it's like gambling. If I'm looking at, playing roulette, or if I'm looking at flipping a coin, at the end of the day, that's usually a 50-50 opportunity. Now, what would I rather do? Flip a coin or trade a stock? Now, you can argue that you have an edge with trading this stock because there's a reason why you think it's going to go to this target. But at the end of the day, you have to look back at the statistics as well with what you're doing with your money. So when I'm entering a trade right here, this is TradingView. You can go over here just so you know, just to show you how to do it. You just come over to the side, you go click right underneath here, expand long and short. And this is free as well. You don't have to pay for any of this. But what you do is you come in here and that's what's going to show you. But simply put, you can do this also, just math. It's very simple. It's just risk divided by reward. So if I'm risking $100 in order to make $2, then I'm making, or $100 to make 200, then it's a 2R value, right? So that's like simply put right there. And so when I'm entering a trade, typically I have to make sure this is above a 2 for myself. So if I'm risking $1, it's in order to make $2. So it's always 2 for 1 for me. What does that mean? That I only have to be successful 50% of the time to continue to be profitable. Okay, so that's one thing you have to understand. I can basically miss on 2 trades, and then on the third one, if I'm still right, then I'm still break even. So all in all, I'm still doing very well, and that's actually just a 1 for 3, a 30%. So 33% of the time, I need to be more right than I am wrong in order to make money right there. Now, sometimes these trades will get a little bit better to where you're going, maybe into the 4R, 3R range. But for a general rule of thumb for scalping, what you're looking to do every day, now I want to jump back out because I want to clarify a few things. So if you're looking at trading, let's say $1,000 account. Now we need to understand simple math that goes behind this. Let's say hypothetically, I'm looking to make $100 a day. So when I go into a trade, I might be risking $50 in order to make $100. That's simple math right there, right? A 2R trade, the baseline of what we just said. Now, if I'm risking $50 per trade, how much of that account am I in fact risking? Carry the 1, and oh yeah, I'm risking 5% per trade. You need to understand that. Is it sustainable to risk 5% of your account per trade with a $1,000 account? Simply put, $50 is 5% every single trade, and you're looking to make 10% on your account. basically every trade as well, or every single day. Now you can scale this down if you're looking to take 5 trades a day, and you can scale it down to maybe risking 20, risking whatever it may be. It's all up to you and on your success rate. But the chances are, if you're a beginner, you need to identify that 1, taking less trades is probably going to be better for you. And number 2, you need to also identify that if you're a beginner, you're probably going to lose in the beginning. It's just what happens. But now that we ripped the band-aid off, we can get to the good stuff, the strategy. And again, I've made a video over this. The link will be somewhere at the end of the video. It's about the 9 EMA. Now, simply put, I was thinking the easiest way to describe this. I think the VWAP and the 9 EMA are going to be your best friends when it comes into trading, especially in the short term. We can go into supply and demand. We can go into a little bit of volume, and those are foundational. However, these two are going to be your best friends to learning how to react to the market combined with volume. So 9 EMA, VWAP, volume, let's get to it. Okay, so we're back into the chart. Now, if we're looking at what's happening here on the chart, what I want to do and what I want to show you is really quick how to get these. So all you're going to do is you're going to come over, and I'm going to just take these off so I can add them right back to the chart. I'm going to get the VWAP, the 9 EMA, and volume. And if you're scalping, you're intraday trading, the 5 minute, 1 minute is primarily where you're going to sit. Although I don't recommend spending all your time there, but for the sake of the video, let's go over. So we're going to add VWAP, VWAP, can't even speak today. And then you're going to add the EMA, alternative moving average exponential, and then we'll add that, and then we'll also add volume. Now on TOS, you have some great indicators, but for the sake of the video, I'm going over TradingView just because I know 99% of people are already using this. Now, what I want to do is go into VWAP, and I want to turn off the bands because I just don't use them. If you want to use them, cool, go for it. That's not my style. And then I'm also going to go into the 9 EMA. I'm going to change this to red so they're different, and then I'm also going to make it a little bit thicker so we can see that as well, because that's just the way I like it. So let's go over. Now, if we look at what's happening, you're gonna have the 9 EMA is the red line, and then you have your blue line right there as well. Now, there's also the volume at the bottom. Now, there's another bit of a cheat indicator we talk about often here if you're very beginner is the opens. Okay, and I'm gonna delete this one also so it's here. And all it is, simply put, is the opens every single day on the market. Okay, so you're gonna add that as well, so it's right there. And so these are all gonna be very basic indicators for you, not complicated, and we have tutorials on all of these. Okay, and so basically what they do is they show you just some key levels throughout the day. The purple will represent the daily, the red will represent the monthly, and then the green will represent the weekly time frame, right? The weekly open, if you will, right? So right on Monday morning when markets open at 8:30, that's where we opened. 8:30 every single day is the the purple, and then the red was where we opened up on the monthly. These are just key levels, right? So for instance, looking at SPY, how did we open up on Friday? We opened up, right? We shot up, we came crashing down, and then we ended the day, guess where? Right underneath that open. Now, coincidental, maybe not. Go back test it for if you're looking at a different equity. But you can see these always revolve around major supports, right? We can just see what's happening here over and over again. So that's what I use here. Now, giving you a quick little strategy what we'll be looking for. I like to spend most of my time on the 5 minute here. Now, the 5 minute 9 EMA is going to be your best friend. Okay, it's going to be you need to love it. You need to get used to it. Go watch the video on it. Now, if we're looking here as well, you need to understand what you're looking to do. Your opportunity, again, we're not going to really cover the strategies of what you're looking for here, but you want to look for targets a lot of the time going into VWAP. Again, best friend for targets, either for targets or for entry opportunities, right? So for instance, if I'm playing SPY, if I'm looking for upside, I want to always be looking to see if I can get a target range of either pushing into that upside into the VWAP or either pushing back down into that VWAP as well, right? So for instance, if we're getting tracking up and you're trying to go short, you want to try to aim to hit that VWAP, right? VWAP is going to be almost a magnet throughout the day, whether you're trading to the up or to the downside. Okay, now really quick as well, and I know I'm probably going a little bit fast, but I want to get this video really quick for you guys as well. I want to always understand the trend in which we're trading on like a 4 hour or a 1 day chart. If we're clearly trending to the upside, as we can see here, just making higher lows continually, then my focus every day during this trend wants to be to the upside. I don't want to be a downside trader, okay? I want to only trade to the upside. Why? Because I want to increase my odds of winning because I'm trading with big money and the trend, okay? So off rip, if I'm targeting anything, it wants to be, if we break below VWAP, I want to target back into VWAP, right? That's going to be the quick money strategy, right? It's going to pay off a high % of the time, right? So for instance, we break down below VWAP, we get a nice hold in the 5 minute, going down, get a nice double bottom here. Once we get back above, you can see the next day, you don't get that opportunity because you just open the next day after VWAP and you start moving back up. Now going back to here, we have the monthly time frame here. We start mounting the monthly very quickly. We get back up with the 90 EMA, which if you follow the strategy, you start climbing right back into what that is, the VWAP, right? So again, this is going to be your best friend. I don't recommend the MACD. I don't recommend the RSI or any of these Fugazi indicators. They're just going to hurt you. They're just going to leave you crying, and they're going to leave you emotionally damaged, probably losing money. Okay, so we have exactly what I'd be using. And again, I didn't go extreme detail on the strategy there, but again, the videos and the links are down below. So I recommend checking them out. Full detail. They're very quick as well and very simple and for beginners to understand. Now, diving a little bit deeper. Now, I'm not going to even go into showing the charts on this part of it, but I recommend when you're looking at equities, and I know we're spies in the title, but if you're looking at trading equities as far as stocks, right, focus on 3. This is my personal opinion, how I teach in Discord, how I teach in general, though. You're going to be watching, obviously, SPY and QQQ. However, you might want to start focusing on some equities as well. So what I would do is find 3 that you like, and they would preferably be mega caps. Apple, Meta, Microsoft, Nvidia, Google, or Tesla. Those are going to be your best friends. Those are going to be the money maker ones, right? So find 3 that you like, learn how they move, and just watch them day in and day out. A lot of members in Discord, they do this and they notice immediate success in their trading because they start to focus and hone in on a few things rather than focusing on everything, right? That's why when you look at anything in the world, you have people that are masters at their craft, not masters at everything. Very rarely do you see the people that are dominant at every single thing they do. Now, those people, they're considered the GOATs. You need to understand, me and you, we're not the GOAT. Well, at least not yet. So again, to recap, what do we want? What do we need? We need a good broker. We need a little bit of equity. Now, again, I gave you the math on starting with $1,000, and that's like the bottom baseline of where I think you could start. Think starting below $1,000 is very dangerous. Okay, it's very, very dangerous because you're probably going to blow that money up. But proceeding a little bit beyond that, you need a good broker, at least $1,000, and you need to understand your risk to reward, right? That's the really biggest part of this, because you can come together, have a strategy, but if you don't understand how much you're risking per trade, then you're not going to have a good baseline as a whole. And that's really where everything really starts to come together. So understanding that risk to reward, then combining the 9 EMA, VWAP, volume, and then the opens indicator will be your best friend for getting started immediately if you are a beginner. And if you're very interested in learning about exactly what's happening every single day, Monday through Friday, we make videos on explaining the market movements, market movers, and stocks we are liking. Again, comment down below. We would love to answer your questions. See you next time.